Hi, it's the analyst from Think Like an Analyst, and today's video is the second in a series we're doing on a group of companies that we think might benefit from the infrastructure bill currently being negotiated in Congress. The impetus behind this series of videos was an article published by Morgan Stanley recently that identified basic materials, steel, and construction equipment as three sectors that would likely benefit from the infrastructure bill if passed. I've posted a link to this report in the description below in case you're interested. In our first video, we looked at three basic materials companies, and we translated Morgan Stanley's supercycle story into a set of base case forecasts for each company. Our conclusion was that the story seemed to be already priced in, except in the case of Eagle Materials, which looked like it still has some upside. We've now done the same for a group of American steel companies, including Nucor, Steel Dynamics, and U.S. Steel. And what we find is that in contrast to the materials companies, the story for steel still doesn't seem to be fully priced in. In fact, all three of these companies look cheap compared to basic materials, and they all look like they have some upside potential. So at a high level, here's the approach we've taken to developing a set of simple forecasts. To begin with, our starting point is again consensus revenue forecasts, as this is a good measure of current market expectations. The market is expecting a significant turnaround in revenues for all three companies in 2021, reflecting a sharp rebound in demand from the auto industry, an increase in construction activity, and strong pricing. For example, analysts expect revenues to jump by 61% for Nucor in 2021, 72% for Steel Dynamics, and 85% for U.S. Steel. And while analysts expect revenues to drop off slightly in 2022, we've assumed that revenue growth stabilizes at around 5% per year from 2023 onward for all three companies. We've also assumed that returns stabilize in the 15 to 17% range for all three companies, slightly above historical levels, to reflect an expected bump in margins as the industry takes advantage of a period of pricing power. So let's look at each company separately, starting with Nucor. Again, our starting point is consensus revenue forecasts, which suggest a strong rebound in revenues from last year, from $20.1 billion to $32.4 billion, or an increase of 61%. One quick note here, Nucor just recently announced the acquisition of a Canadian company, and we expect that the expected results of this acquisition are fully incorporated into the consensus forecasts. In 2022, analysts expect revenues to drop off slightly, so we've incorporated that into our forecasts. And then beyond 2022, we've assumed that revenue growth will stabilize at 5% for the duration of the forecast period. And in terms of returns, we expect a bit of a bump in 2021, reflecting the significant jump in revenues, and then beyond 2021, we're forecasting returns in the 17% range, more or less in line with historical levels. When we look at the valuation table, you can see that the model produces a fair value target of about $125, which is about 30% above the current share price and above the consensus price target, suggesting that the market expectations are below what we've reflected in our forecasts. Moving on to Steel Dynamics. Again, we take the same approach to developing a base case set of forecasts by starting with consensus revenue forecasts and then stabilizing revenue growth at 5% from there. We've also stabilized our return on invested capital forecast at the 15% level over the forecast period, which again is in line with historical levels. When we look at the valuation table, we can see that our model produces a fair value target well above the current share price and well above the consensus price target. And now finally, we've taken the same approach for U.S. Steel, so I won't go through the numbers here, except to say that our return forecasts for U.S. Steel are lower than our forecast for the other two companies, which again is consistent with its historically weaker returns. Nevertheless, our model is still generating a fair value target above the current share price and above the consensus target, which suggests that our forecasts are more aggressive than the market expectations. So once we have our base case set of forecasts, we can now look at our summary table to see what kinds of high-level conclusions we can draw. Notice that we've included our group of materials companies in our summary table to provide a deeper set of comps. What we find is that we are forecasting comparable financial performance across materials and steel. But what stands out is the valuation comps that suggest that the steel companies are cheap compared to materials. And again, this is consistent with our analysis, which suggests that while materials are fairly priced, with the exception of Eagle, there still may be some upside for steel companies. We'll point out again that our forecasts are not based on any deep dive analysis of each individual company. Instead, we've simply used the model as an analytical framework that allows us to translate the infrastructure story into a set of explicit forecasts, which in turn allow us to generate a fair value target for each company. To develop our base case set of forecasts, we've taken a simplified but disciplined approach that incorporates three components. 1, past performance as a way to ground our forecasts. 2, consensus as a way to reflect market expectations. And 3, the company or industry story as a way to guide our forecast trends. In the case of steel and materials, it's the prospect of an infrastructure bill that would increase product demand over an extended period of time, driving above-trend revenue growth and perhaps also driving some margin expansion. The point of the exercise is to put some real numbers to this story so that when you're evaluating companies, you have a structured way of doing your analysis. I'll leave it here for now, but I've left a link to the models in the description below, so go ahead and download the models, play around with the numbers for yourself. Happy modeling.